Morguard North American Residential REIT, we know that North Americans are more discerning than ever, which is why we are focused on evolving together. Our strategy: enhance our portfolio by acquiring quality properties. Focus on asset management by proactively maintaining and upgrading our properties. And continue to create communities that are vibrant and sought after. It's a strategy that has given us considerable success. We're generating stable income and enhanced returns for our investors, and we're experiencing a consistent increase in our portfolio's value. Total revenue from all real estate properties in 2017 was $226 million, an increase of $8 million year over year. Net operating income increased to $123 million from $115 in 2016, an increase of $8 million, primarily due to the strength of the residential rental markets in Canada and the U.S. And funds from operations increased to $60 million from $58 in 2016, an increase of $2 million. Our key objective is to enhance the value of the portfolio year after year, and in 2017, we achieved it with resounding success. We acquired 1,171 premium residential suites that are all located in vibrant urban markets. With the addition of these newer, high-quality properties, we've increased returns through higher rents and lower maintenance costs. At the same time, we divested 1,329 residential suites in older, non-core properties. Our largest acquisition was Coast at Lakeshore East, a 515-suite rental apartment building in a prime Chicago submarket. Purchased for $286.8 million Canadian dollars and built in 2013, it's an urban high-rise with spectacular views of the Chicago River, Millennium Park, and the Chicago skyline. We've partnered with Healthcare of Ontario Pension Plan, our second joint venture acquisition in the U.S. with this group. Relationships with like-minded investors enable us to meet our objectives, acquire more and larger assets, and maintain an acceptable risk exposure to any single asset. In a 50-50 joint venture with Morguard Corporation, we acquired the Fenestra at Rockville Town Square, a 492-suite apartment community in Maryland, for $163.1 million Canadian dollars. A high-end condominium complex prominently located. It's in the heart of the social and cultural hub of Rockville. We also acquired a 104-suite mid-rise apartment building in the Greater Washington suburb of Falls Church, Virginia, for $55.7 million Canadian dollars. Built in 2014, Northgate at Falls Church includes 33,000 square feet of commercial space and modern amenity space. Currently, it's subject to a long-term land lease, with a fixed-price land purchase option available in less than 12 years. And in Toronto, we acquired Downsview Park Townhomes for $15.8 million Canadian dollars, a newly constructed property with 60 bright and spacious 2- and 3-bedroom rental townhomes with quick access to major highways and regional transit. We are committed to maintaining a high standard of quality for our properties. This requires regular financial performance monitoring of each property and capital investments whenever required. We focus on ensuring our properties are well maintained and continually upgraded to increase their value and revenue potential. As a result, we keep operating costs low, occupancy rates high, and rental rates optimized. In 2017, capital expenditures on our properties totaled $21.6 million. Our extensive portfolio comprises 46 properties across North America, with 40% of the suites located in Canada and 60% in the U.S. The total value of our properties is $2.6 billion. We work hard to attract and retain tenants and keep average monthly rents at sustainable market levels. With our online tenant services, we're more responsive to tenant needs, which helps ensure high occupancy rates and retention of quality tenants. We believe in building communities through involvement and inclusion for all residents. Settlers Creek, located in Fort Collins, Colorado, is a great example of the kind of lifestyle we're creating for our residents. Here, the residents enjoy many special events and amenities, including a fitness center, swimming pool, coffee bar, mountain bike rentals, and more, all of which build community. Our objective is to generate and provide stable, growing, tax-efficient cash distributions to our unit holders. We met that objective again in 2017 by further increasing the REIT's annual cash distribution by 3.1%. Since our 2012 inception, we've delivered a cumulative total return of 79%, 11% annualized to unit holders. Over the same period, our funds from operation payout ratio has declined to 54.7% in 2017 from 94% in our first year. Successful management is prudent management. In 2017, we further strengthened our balance sheet by raising capital and refinancing properties. At year-end 2017, our mortgages and retained debt had an overall weighted average interest rate of 3.5% and weighted average term to maturity of 6.2 years. Including acquisitions, we completed $400 million in mortgage financing during 2017 at a weighted average interest rate of 3.74%. By December 31st, 2017, the REIT's overall leverage was 51%. In January 2017, we completed a significant public offering of units to fund future acquisitions and repay debt, and to provide for general trust purposes. We issued 4.37 million units at $13.75 per unit for total gross proceeds of almost $60.1 million.
Acquisition of upmarket residential properties, a future-focused management team, and a commitment to enhance returns. Morguard North American Residential REIT is committed to evolving together.